Hello, everyone. My name is Maja Erkes-Geiner. I'm a partner with CMS International Law Firm. I'm a banking and finance lawyer, which focuses on restructurings, NPL sales, turnarounds, and distressed debt transactions as such. I'm very honored to be moderating today's panel with such distinguished panelists. And our topic today will be servicing of unsecured NPL portfolios. We will touch upon servicing platforms as well and fintech solutions. And I'm most interested to hear what this panel thinks to what we will wake up when this COVID era ends. But first, let's go to introductions. Philip, maybe start with you.
Yeah, sure. You can hear me, right?
Yes.
Yeah, so I'm Philip. I'm a founder and CEO of Troy. And we believe that struggling is part of life. And the same way companies sometimes struggle to fulfill their promises, customers can struggle to hold up their end of the bargain. We also believe that supporting one another is the true nature of a valuable relationship. But we also believe that support is not just meant to be generic, but has to consider really individual needs. And we know we can achieve.
I'm not sure I understand.
And we know that we can achieve exactly that with technology. Troy is a debt collection fintech that supports enterprise clients with collecting their receivables and improve the customer loyalty along the way. Until now, we've won every benchmark by 25 to even 80% and preserved tens of thousands of customer experiences or customer relationships. And yeah, the secret ingredient basically is tech-driven customer experience that we incorporate into the debt collection process. That's me, and this is Troy.
Jacques?
Thank you. Hello, everyone, and thank you for attending this panel. I'm currently the CEO of Multirestion Iberia. Multirestion is an independent servicer, one of the last independent servicer in Spain, and we are also in Portugal. We are existing since 30 years, providing servicing to banks, the main banks in Spain and Portugal, and financial industries. And we provide solution regarding collection, of course, BPO, so any specific processes. And also we help investors in buying portfolios, so doing the modeling, the analysis, and the due diligence, and of course the servicing after that. Currently, we manage 7.5 billion in balance in Spain and Portugal, and which means 1.5 million files and for customers for our clients. And we have more than 90 clients, active clients today in Spain. And and we have two platforms, one in Spain, one in Portugal, close to 300 employees. So meaning that we are active in all NPL, but not only, also servicing, of course, the early collection for the financial companies, and we are specialized in collection that are amicable collection and litigation collection. We have, of course, some internal lawyers, so we do all the aspect of end-to-end processes of collection for that.
Thank you. Renato?
Thanks, Maya. My name is Renato Limuti. I am a managing director at Alantra in Milan, and I lead the credit portfolio advisory business here in the country. Alantra is an investment bank with 540 professionals operating in 20 countries with 24 offices. We operate with three divisions. The investment banking division, the asset management division, and ours, which is the credit portfolio advisory business. Within a credit portfolio advisory, we advise banks, financial institutions in general, financial sponsors, corporates on transactions as NPL NPL portfolio, NPL and UTP portfolio sales, structured credit transactions, securitizations, funding, and other structured finance. We also have 40 pricing and analytics professional developing our own technology devoted primarily to the NPE industry, and we do have 40 professionals working on the prop tech kind of vertical we have within our organization. So all in, we are under 50 people working on credit and credit-related transactions, and we have been good and lucky enough to have been working in the main primary and secondary transactions in the secured and unsecured business in Italy and abroad in the past a couple of years for sure, but with a longer standing heritage since the beginning of the leveraging of the system in Europe.
Thank you. Jelle?
Thanks, Maya. So I'm Jelle. I'm Chief Contact Center Operations Officer for Hoist Finance. Hoist Finance is a bank, a savings bank, deposit saving you can do with us. But in 12 countries in Europe, we're active in buying mainly unsecured non-performing loans. But since a number of years, also we have ventured into the secured space. And we're now also looking into entering the performing loans space. We are roughly 1,650 people, of which 1,100 are under the contact center business line, located throughout Europe to collect the debt that we buy. Our philosophy is to help people back into financial inclusion. So our processes are set up in a way that we create affordable payment plans and help people get their lives back on track. Recently, a few years ago in France, we entered into the secured space, and we are there now the #1 buyer of secured NPL assets. And worth also to say is that we recently acquired our first 4 performing loans portfolios as well. We're on quite a journey still, evolving into the digital space. I truly believe also that more and more customers are looking for digital payments solutions, self-serve payment solutions. And I think that's my area in Hoist is slowly changing from now the bulk of people in the contact center space creating payment plans towards those going digital. Customers will be able to help themselves digitally, and the focus of the contact center agent will move more to vulnerable customers, over-indebted customers, to find solutions for those as well.
Thank you. So our panel will be joined by Tomaž Nideršič a bit later on. He's the head of workout and restructuring at Sberbank. But I propose that we just start with the discussion. My first question goes to you, Renato. You're on investment side. How hard is it to find a reliable servicing partner in Europe, and does that differ from country to country, region to region?
Yes, I mean this is a very local question. You're right, Maya, in saying that, because every country has its own specific characteristics in terms of composition of NPL, and obviously its own characteristics in terms of supply and demand of servicing and collection suppliers. I'll give you an example for the country, which is the one I follow directly and mostly, which is Italy. We have a combination in the country of players with a more domestic origin and international origin. The things have been changing quite a lot in the past 5 to 8 years with incumbent players that used to be niche, unsecured collection services players from the 90s to today, still operating and actually operating with a broader spectrum of activities and certainly broader capital behind. And additional ones, some of the main international groups that have been acquiring in the country servicing and investment capabilities. You do have today in the unsecured part, which is the topic of the today's conversation, mostly of the conversation, it became more and more a play of combined investing and servicing activity. If you see at the market the way it is configured, so the best probably or the largest servicing platforms have investment capabilities on the unsecured side. They can certainly work on high volume data tapes of in terms of portfolios, but certainly they deploy their own capital. If you are an international new entrant and you want to get into the Italian market without servicing of your own, it's complicated probably to find independent suppliers of services. Some of them they do have, but you might have a sort of a conflict perception when you speak with them. There are several players here in this room that I can comment more specifically on this topic. The secured part is a bit different because you have well, when you get to less granular portfolio, it becomes more and more a boutique kind of an approach. So a new structure with 10 to 20 operators can call itself a servicer and can be as independent as you want. And there are several new one and so when it comes to Europe in general, I think that the unsecured market is rather similar with a broad, not always dominant, but broad presence of combined collection and servicing platform. And again, that is certainly good for competition if you are a seller, because you have more players you can involve into processes because they can buy and service independently. But for pure investment companies, it can be seen as a complication because it's more difficult to find your own sparring partner, independent sparring partner. I see that there are some hands here, and Philip on the left, and then Jacques as well, coming from different backgrounds. They might want to comment on this.
Please.
Yeah, thanks, Renato. From what I see, I think debt collection regulation is quite locally, right? It's probably more a country issue. So you have to consider a lot of specific regulations when you look into the different countries. When you zoom out a bit and look, think basically about the, let's say, about the customer experience expectations that customers have, the way we see the shift to digital, for example, the way or the desire to remain in control, to gain transparency, things like that. This is something we also see more as really a pan-European tenant, as a pan-European trend. And this is something actually that we try to achieve basically with our platform strategy, to make sure that we comply in the local markets with the local regulation, and also then consider the specific requirements of the market. But at the same time, I mean, most of the global brands design their brands not for each country, but more on a global or international level. And this is basically what we then try to reflect also in our processes, to make sure that you have a really a homogeneous, basically customer experience across all countries, while considering local specifics. Does that make sense, Renato?
Yeah, thank you, Philippe. I agree with you. I think for new investors coming in a country, so it will depend. I think there is some key aspects to take into consideration. First, what is the level of outsourcing that you can understand or can live within the country? So this is more all the banks and financial companies currently outsource everything or not. And this is going to impact a lot what type of servicer you're going to find. And it's why in some countries, for example, and at the end, sometimes it's more simple, you have a lot of investors that are going to build their own platform because they don't find, at the beginning, they don't find a servicer that can really offer what they're expecting or share their strategy. But this, this can change due to the experience of crisis and the level of outsourcing that you can observe within the country. And the second thing would be what is the regulation and compliance that you can find in front of you. So meaning that if you take a service survey that is not compliant, or let's say that has less compliance compared to you as an investor, but you are, let's say, international as absolute, so you can have some key issues. So the level of compliance and let's say a regulation could be very important. So I will say what we observe, for example, and I'm going to take the example of Spain and Portugal. In Spain, the level of outsourcing is very high. Very high meaning that most of the banks have outsourced since the last crisis, so since 2010. And right now, there is very few banks that are not outsourcing their collection, for example. So meaning early collection, late collection, and even more. And this is going to continue to grow because currently Spanish banks are thinking more about reducing their costs and their level of the number of employees than other things. So working internally and not using the outsourcing for banks or financial companies is something that very few are really using today. And they find a way to really align servicer to their strategy, because at the end it's very easy. And as Philippe was commenting, with the technology, you can really, really control a lot now and very easily, and you can really standardize what you want to standardize and really make flexible what you want to do, what you want to tailor for the different segment that you can have. So I don't think this, the controls over servicing companies is something complicated now. But if you compare to Portugal, for example, so Portugal, banks really don't outsource, except some banks that are more internationals or with strategy that is outsourcing, but most of the banks don't outsource before, let's say, NPL. So it means that the experience for a servicer will be slightly different, mainly focus on NPL and not on all the life of the loans or the bank's credits. Why Portugal is not outsourcing like in Spain? I think it's mainly because of cost. Okay, so they have less pressure on cost compared to Spain, and the cost for an employee is much less in Portugal than in Spain. So it may be the reason why they don't outsource too much. Okay, but after that you have the investors. So when you are an investor, initially, usually taking the experience we went through in Spain and Portugal. So usually at the beginning you are using a servicer, independent servicer mainly, of course, because and now very few, so it starts to be very complicated for big investors to find an independent servicer. But very quickly they want to control everything, so they want really to have their own platform. So it's what we observe. Is it something that is sustainable in the future? I don't know. I will say that there is a lot of interest in the outsourcing, and I think the technology that we have today helps really to control everything. And after, it's a question of being transparent between, let's say, the clients, so the banks, the financial company, or the investors, and the people working on the portfolio. But I think the transparency can really help now. And when you have a servicer that is really scalable to have the scales to manage a lot, you can have lots of optimization. So for small investors or for small financial companies, I don't think it makes sense to not use the outsourcing. Let's say that.
So, Jacques touched upon outsourcing, and this is something, a trend that is also in Slovenia starting to develop. So banks are optimizing, reducing costs, and outsourcing more and more of servicing. Jelle, a question to you. What is your experience in that regard?
Yeah, so we typically invest, and then we want to do our amicable processes ourselves. So we have quite a few contact centers around Europe where we then collect amicably ourselves. But we typically outsource non-core, like most banks, and for us that is the legal part, where we look for partners. And I think a lot of that has been said already. I very much align with what Philip said about your partner has to be an extension of your own customer journey. What I have to add is that it's also very important that for us, an external partner should not be so big that it becomes a factory where you send your customers to, but it should also not be so small that they become financially dependent on us. Should we ever want to move away, we wouldn't want to pull over an external partner just like that, just for making such a decision. So apart from what has been said, I think to find really the right sized partner able to move quick enough to the direction we would like them to move, to be that extension, but also financially stable enough to be able to support us, but also to support us maybe after a couple of years benchmarking or leaving again. That is, I guess, the biggest challenge.
Can I add just one thing? Because if you look at Europe, okay, I know that now we are not in Europe, but if you look at UK, so what is interesting is because of the tough regulation and tough control from the FCA, and I've been working in UK, okay, they have, so clearly the outsourcing is a good solution to protect the banks and the financial companies. So that's let's say, the increase in the consumer, so protection of the final client is sometimes also a good option to improve your processes and avoid big issues, because you can rely on some technology that will be complicated for you to maintain, or some knowledge that will be complicated to maintain. But I agree with what you said, Jill, meaning that clearly here you have to rely on your servicer, because at the end, if you use a servicer, of course, and this servicer needs to completely follow the journey of your customer. If not, it's a big issue. Yeah.
We have one question, and basically, thank you for that. And the question is, at what extent technology offered by fintech companies in dataset, portfolio analysis, reporting, and trading support you use in your daily business? Do you see specific issues that could be improved in that respect?
To whom did you ask, or can I answer that?
So, yes, please, Jelle. Whoever, so participant asked that question. So, Jelle, please.
Yeah. So in terms of valuation and portfolio analysis, I think we've come a long way. But where I truly see more and more added value is in new ways of being in contact with customers. So customers are, at least I see that customers are slowly moving away from wanting to log into yet another portal, and then they want to have faster solutions, maybe within the email or the SMS itself, want to be able to create their payment plan and not remember yet another password, for example. So it's in the communication space where I would answer that question.
Would anyone else like to add anything to the question?
If I may, on our side, Maya, we've been working and assisting clients regularly on the sale of large portfolios, and in the past years, certainly 2020, 2021, we are increasingly using remediation done with new technologies. When I say remediation, is everything which goes from cadastral data to mortgages existence to job investigations, everything done with new platforms that in the meanwhile have been growing, has been extremely useful for us and obviously for our clients, because that input becomes part of their input when we present them to investors. This can be, it's now done efficiently and effectively in less time and with less money, because at the end of the story, it's not you as a client making the investment, but it's Philip or Jelle or whoever operating in the provision of those information that they have done the investment. The other side of things we have seen personally, that is something we developed on our own, is on the unlikely to pay portfolio, for instance. And it's something that is possible today and was not possible yesterday. We developed on, well, in Italy, the NPL market and UTP market is, as you probably know, primarily an SME market rather than private individuals. So it's very important to solve that kind of problems. And the UTP problem seems to be big. Thanks to machine learning and new technologies that we developed internally, we are now able to scan a portfolio of, let's say, 500, 600 granular corporate unlikely to pay exposures, and we are able to say which of them are more likely to survive with the technology that we own. So we own all the assumptions to make that decision, and to attach, to link each of those positions to a set of solutions or servicing collection strategies in a one-by-one basis or decision tree basis. This generates a boosted tree of opportunities and ultimately a business plan for the portfolio, which is not anymore card-based. It is based on a massive analytic basis. Don't know whether this sounds too complicated for most of you. It is complicated, but it is very simple. And certainly it helps you as an investor to decide which are, out of the 700 positions I mentioned, the top 50, top 100, where you want to focus your investments, where you want to focus your restructuring capabilities, because restructuring a credit, it is expensive, and you want to focus that investment, that capex, on those names which are more likely to become cash. That's something that today is possible thanks to technology. Yesterday was not.
Yeah, maybe just to add on that, I very much agree with what Jelle said. What we see is the expertise about portfolio evaluation or analysis is pretty much building up on our client side. I mean, to be fair, machine learning in that regard is also not really rocket science. It always sounds fancy, but in the end, it's not rocket science anymore. And we see more and more clients really asking for help with processes and communication with the customer, with automation in that regard, with bot solutions also, and self-service. So it's probably more really the help with the efficiency of the processes and also then the efficacy of the processes than it is about the evaluation of portfolios, for example.
So, Philip, maybe additional question, because you are coming from fintech startup, right? So what are all the advantages of servicing platforms? Maybe you can tell us more. And also, how can you individualize more? Do these tools individualize more the recovery process? Yeah,
I mean, when you say what are all the advantages, I probably need the next half hour myself. What we see definitely is we see strong ties between really what you would define as customer experience and performance. So tech-driven customer experience that allows multi-channel communication, merging multiple channels to an omni-channel experience, providing real-time transparency, multiple payment options, and self-care. These are all basically drivers for performance, and this is also what we saw in every benchmark until now. I mean, we've had benchmarks against smaller and larger players, against European market leaders, and every time we outperformed them by 25 to even 80%. So this is definitely one of the strong assets that fintechs can provide. But it also goes beyond that. It goes into areas of scalability, obviously. I mean, just maybe one or two examples. If we set up a new workspace, it's obviously virtual, and this takes 15 minutes with our IT guys. And if we set up 50 workspaces, this also takes 15 minutes. So this is a way of scaling, obviously, operations that helps quite well. And at the same time, I mentioned earlier the way that we build our platform. We basically use local debt collection agencies that comply with the local regulation and use our platform to deliver, basically consistent customer experiences across all countries. This means that we scale into new markets much quicker and also much cheaper than anyone else. And also are able to maintain the customer experience progress that we see through technology innovation. If a new channel is introduced, if a new bot solution is introduced, all that we develop centralized, and it's immediately available in all countries that we serve. Maybe one last thing, this is something probably no one has in mind when thinking about debt collection and tech-driven opportunities. It's about compliance. Jacques mentioned the very strict regulations that you see in UK, for example, and with a very strict processes that you have to run through with understanding what basically the current situation of the customer. Stuff like that used to be part of some kind of call center workflow. And we, for example, implement that into an AI tool. And every checkbox that you have to check from a compliance point of view is documented in real time, and the agent receives real-time consultancy basically on how to improve the call. So I also see that AI and tech brings you a long way in compliance.
Thank you. We were discussing servicing, outsourcing, and of course, probably the experience, at least our experience in the law firm, is that usually around the countries in Europe, you don't have a problem when transferring NPLs. So sale of NPLs has become something usual, standard. I think there is a lot of international practice in all countries. But my question is, Jelle, to you in Netherlands, how that works in Netherlands? Are there any restrictions for selling the NPLs?
Well, technically, I wouldn't say there are restrictions, but I guess we're a bit of a strange duck in the pond, as we like to say here in the Netherlands, where if you look at the European Committee, I think from the Dutch side, you will only hear opposition against debt sales. And that's also how our conduct supervisor acts still, I would say. Although I have to say that our collaboration with the conduct supervisor has greatly improved, and we see more and more confidence in what we do. Let's say over the past few years, they haven't typically promoted the sale of debt, as the conduct supervisor saw that as something not particularly good for the customer. So we spent a lot of time in adapting our collections processes to also make the regulators see that there is added value in selling debt. But so far, the major banks are not selling off consumer credit NPLs to a large extent. Yeah, because of that view.
Okay, and is securitization an option? Usually it requires a true sale, or securitization is also not an option?
Well, I think we proved that securitization with NPLs can work. I mean, for us, it's definitely a good solution. A few years ago, we did our first one in our marathon SPV in Italy. But now with our new partnership with Magnetar, I think we proved that for a bank like us, you can definitely have risk weight relief and still be at a good funding cost level and profitability through securitization. Absolutely.
Okay. We have a couple of new questions, and so one, it relates to fintech platforms. Do these fintech platforms apply to central banks regulation is the question. Philip, any thoughts on that?
Yeah, for sure. I mean, if you want to act in that market, you have to be compliant. And this is, I mean, probably for fintechs, even more to prove than for established players. This is, yeah, obviously has to be part of any solution if you want to be a player in that market.
I would say even if you're a fintech startup and you want to do business with the bank, you will probably face a bit of a higher bar because banks don't typically want to be first movers. So you apply, or if you don't, you're not in business.
If we just look at the last few RFPs that we won, it's really hundreds of pages of security and compliance stuff that yeah, we work through. But obviously, in the end, if the deal is large enough, we are happy to do that. And as I said, technology is a driver for compliance and not the opposite.
Yeah, it's a way. The compliance for a bank is a way of life, and if you cannot step on that train, well, then you're stuck on the station.
Good image.
So next, one question. So you're coming from financing, servicing platforms. Do you see, Jelle, any kind of regulatory changes or legal changes or legal innovations that would help to speed up the recovery process in your experience?
That's a very broad question, and I think it depends a bit on where in Europe you look. I mean, coming from the Netherlands, I can definitely say that everything that has to do with consumer protection, protection of vulnerable customers, regulation around that is definitely increasing. So if you were in this business 5-6 years ago, people used to say collecting cash is about fighting for share of wallet. But that definitely is turning into a thing of the past. If you want to be a successful cash collector, you try to create payment plans that stick based on thorough affordability assessment. And I guess the party that is able to do that in the most efficient way will be the winner in the end. But those parties that fight for share of wallet, as we used to call it 6 years ago, and they go for the quick wins, and they may be good in 1, 2, 3 years, but that is where regulation will catch up. And we see that already in the Netherlands, but I guess that is spreading south more and more. I heard about it in France lately a lot, that there's renewed focus on these things. And I guess
every country, you're right, every country is adapting. Let's say that the worst will be UK in terms of application. But after in France or in Spain, Portugal, you have lots of laws to protect the customer, and which is logical. So it's increasing year after year and month after month. It's a normal evolution, and it's not going to stop. And what is important in reality, and it's where technology helps a lot, like Philippe was explaining it, or it's really about finding the tailored solution, so the good solution for the situation of a customer and to solve it. And that's the good things that the technology is technology digitalization or whatever you call it. But the help of the, let's say, artificial intelligence or all the processes we have about digitization, etc., within the management of a debt is really helping to to put some tailored workflow and not what we were having 10 years ago or less for some, but which was a standard process for everyone. Now we have multiple process based on the segment and the situation of the customer. So it's really what is today the, let's say, the standard for a company to manage. And it's why I think the outsourcing has lots of future, because now with the technology that you can implement, it's really easy to adapt the solution you're going to do or the actions you're going to apply.
Yeah, I guess some parties will really have to redefine what is their core business in order to keep up with all the change.
After the strategy of the company, yeah.
Yeah, we also see it on the legal side, where even with the courts, we're looking at digitalization, change of subpoena language, even to make it more understandable for the customer. Yeah. Those are changes that keep coming, that will keep going.
Tomasz, you finally joined us on the panel. Maybe a question to you. We had a lot of questions and interest about fintech solution, technology, digitalization. So what did you in your bank apply? So what are the technological tools and how did you improve the credit management already and what do you anticipate in future?
So thank you, Maya. Thank you for your question. Thank you for waiting. Thank you for raising the question. Yes, maybe just to go on, hope that I haven't missed, but rather I will discuss them bilaterally with colleagues. In our banking group, what we've done in the last homework, let's say after the financial crisis, are actually two major streams which we developed. The first one is that we moved focus of post servicing to pre-servicing. Yeah? Means that we somehow develop based on all those stuff which you mentioned, you're discussing, digitalization, artificial intelligence, BI, etc., robotics, that we are able to identify potential problems already in the very initial stage. Yeah? Meaning that introducing some list of signals besides these which were available back then 6-7 years ago. Now the list is longer for, I would say, 50% of the signals which we are tracking and how we could somehow identify potential problem triggers on the client side. Of course, we are not super sufficient yet. Yeah. We are still in phase of development. We implemented first phase, but already indications show, first phase implementation shown very good progress. Second, what we've done is also so far we learned a lot of last crisis, of last let's say crunch or whatever. Especially by internal servicing of the portfolios, and besides that also what are pros for outsource and what are the part of portfolios which is supposed to be sold. We developed some new tools for collection, for resolution. We standardized the processes. We try to move faster from one tool, let's say, in the certain stage of velocity delinquency to another one. So we are not anymore waiting for several years, would say, but rather to move this faster. Why? Because we somehow collected a lot of data statistics that we are able to predict, to make scenario and immediately act in a way to optimize the recovery. Maybe this is not directly related to Jelle, who said that this is the future of the collection when you understood when the creditor understood the creditworthiness, the potential ability or ability of the borrower to make it sustainable. Yes, this we also implemented, and with it, I would say that we are quite successful. Meaning that we already trying to predefined potential distressed situation of the client, trying to understand and trying to avoid potential these delinquencies. On some hand, when we identified, again based on the data, based on the statistics, that we would be able to restructure in TS, and we identified and flag this client as a strategic stay. If not, then we flag this client as an exit, and then we are looking forward for exit. Not for any price, of course, but for exit. Why? Because there's another topic maybe to raise here, that the banks in the last couple of years dramatically reduced their NPL books, not only on unsecured, but rather also to secured, and also to some combined or other segments, bankruptcy, etc. So, and parallel to also the teams have been somehow restructured, and now focus is much more to this, what is on the way, and those teams which remained are actually trained in that way. So this is actually the third improvement of the processes. Of course, everything is very strong related by the EBA guidelines, which request on yearly basis and put the banks into the position to always needed to implement some standardization, some improvement of the process, some data collection by the origin, etc. So, and this is maybe also one step forward to where do I expect personally that will be next wave, meaning that the assessment of the credit worthiness would improve based on this all new indicators, new attributes collected at the very beginning of the initiation of origination of the loan, would help a lot the creditors also in these exit situations further on.
Thank you, Tomasz. Renato, maybe a question to you. What do you see in M&A?
Yes, Maya. Well, it has a lot to say. You have to see these trends with the stock of NPLs and NPs in general in the European market. If I see the Italian market, we got two shocks, important shocks in the past now 15 years. It was the Lehman Brothers crisis and then the sovereign debt crisis. At the end of those shocks, we have seen massive investments from domestic and international players into the outsourcing, into the servicing industry, because the stock of NP was mounting. And that's where you saw large carve-outs in Italy and abroad, setup of new platforms, etc., etc. For the past 3-4 years, we have seen servicing has become more and more a zero-sum game. Again, if I take the stock of NPEs in Italy in 2017, which was probably the record, was 370 billion, primary and secondary. If I see, well, in 2019 and 20, beginning of 20 was around 340, so not much of a difference, with a bit more obviously on the secondary. Now situation is changing. So what's happening is that those large players that have in Italy and abroad invested a lot into the servicing industry, adding up verticals, adding up teams, and adding up people in countries. Now they are optimizing their internal portfolio, so focusing more on one or the other division, one or the other country, and potentially divesting and acquiring those areas which maximize the new redefined, streamlined strategy. In the meantime, we are witnessing mounting up of pipeline. And again, if I do the math on the Italian business, we think that the overall stock, primary plus secondary NPL, in the next couple of years will arrive to 440 billion. So there is an opportunity there. And a lot of players, independent, digital, usually technology driven, are rising and raising capital. And I do expect that there will be a new large wave of capex from large incumbent players into newer models through aggregation, through M&A, from 18 months onwards. 18 to 12 to 24 months. This will be probably the stage where we will see more and more M&A in the sector again.
Thank you. Maybe one question that I'm most interested to hear from you all is what do you basically expect will happen when the government support will be withdrawn and moratoriums end, because we are now at the time that basically the COVID era hopefully is slowly coming to an end. So to what are we waking up, and do you see any indicators what type of loan assets could emerge out of this? Renato, maybe you start.
Yes, I can start with the well, again, here we go to specific country-specific situation. Each country has put in place government schemes which are different from one to the other. In our pitches, in our documents, you will see that we come up with mountains of debt. Those mountains, each mountain represent a single debtor. You have the tip of the mountain, which is the guaranteed exposure by the government. The remaining part, which is unguaranteed. So you are a bank, and in 2022 you want to divest your NPE. The question is very complicated, and the answer will be complicated as well, because you have these mountains, which is a combined one. When a part it is guaranteed by the state, the other one it is not. Who's going to service what? Who's the stakeholder, and who's going to buy what? And why do you want to sell a client that, in some part, can be still performing? We think that there will be a new asset class, which is the guaranteed or partially guaranteed NPE asset class. And we think that that asset class will need to be serviced in an innovative way. Those players that they have provided guarantee into these instruments, which have largely refinanced existing exposures, will need to have a say. And I don't think there is an answer yet, but new, I don't know, bad bank models, state-owned servicing models, or a combined version of private and sector servicing models will have to emerge to solve this conundrum, which is made of two complicated stakeholders that not necessarily will agree. Don't know whether the other panelists agree on that, but that's for us a new trend.
Tomasz, your thoughts?
Yes, I'll just follow up. Renato actually finished. Yes, I do also see this special type of new NPE asset. This what is somehow governed or state-backed about certain guarantee schemes. Depends on the country, depends on the market. When I'm looking through the landscape of the Central Eastern Europe, I would say that in some countries, yes, more developed, in some countries less developed. Second, what do also see is that existing servicers in this region, which are reputable, and based on this experience they gathered in the last 5 years, let's say, new vehicles, new products supposed to be developed. I think that here the strong support would be on the forward flow again. Besides forward flow, we do see most probably in particular jurisdictions also some kind of special securitization models, special risk participation models, syndication, whatever. And third, maybe we do see a special type which would be somehow would go for restructuring. This would be some kind of strategic industries we identified. Here I'm talking about hospitality. It depends on the country, of course, and their strategic and GDP structure. But for example, hospitality business, transportation, airport, aviation, this somehow we do see would have special attention with some where special servicers with this particular boutique experience will be engaged. This means that some kind of special financial legal advisors would need to take place. Most probably the banks would not develop their own teams just for this purpose.
Thank you. Jelle? Please, Renato, please jump in.
If I may add just one thing on Thomas' comment on the securitization side, I think one solution could be to anticipate the problem and tackle those credits while they are still, let's call them stage 2, with a sort of synthetic structure where the servicer, the specialist servicer, is one coming from the NPE world, so that you will anticipate the flow and already have in place a backup scheme in case some of those credits get there. And then, you know, there are technicalities to be, we could have another panel of a couple of hours on that, and I'm sure we will have a lot of fun, but let's call it done for the time being.
Thank you. Jelle?
Yeah, so of course we don't have a glass ball, and I don't want to be too fatalistic, but depending on where you look. So moratorium first, an example, Italy. If the moratorium expires, what will happen? We will definitely see there the SME market increasing again, but the question is to which extent, because as I understand it, the moratorium led to a halt of payment obligations, but those are not really being tracked thoroughly. There's simply no capacity for that. So estimates are that around 30% or up to 35% of the small, really small enterprises under that moratorium are already bankrupt. So when the moratorium is lifted, and we all go and chase those payments again, it will become difficult for banks to chase it in the first place. Then there are other areas in Europe where, except or apart from a moratorium, there's been government support to companies in need. That government support will then be tested in hindsight, whether those companies actually were entitled to the government support, and that will be reversed in some cases. So I think smaller enterprises is definitely a segment throughout Europe where we would expect a surge in new debt arising. And as a consequence of that, the consumer side, perhaps, but we're not so sure on that yet. And I don't think we will see that already this year. This year will probably be marked around getting out of the pandemic and trying to recover, only to see those efforts, in some cases, fail later in the year. And then maybe beginning of next year, we'll see volumes increase.
Thank you, Jelle. Philip?
Yeah, well, maybe a bit off topic, but as a fintech entrepreneur, you have to be optimistic per default. So regardless of whatever happens, I'm pretty sure that yeah, with a combination of tech and customer experience, we find the right solution and make sure that that it still works out.
Thank you, Jacques.
If you look at the moratorium and the help from the government that has been applied in Spain and Portugal, it's really huge. Just for example, Spain, the level of balance that is under, let's say, help by banks or government is 80 billion, or was 80 billion. So which part of this is going to go in delinquency? And that's the question. I think as Chair was saying, the SMEs is going to be a brutal impact. It's going to be really, really hard. Today, we don't see that. The level of SMEs going in bankruptcy is just ridiculous compared to what it should be. But it's just hiding the forest, you know, so that's an issue. I don't see, but here you have lots of help directly from the government and not only the moratorium. So the help from the government can help a little bit more, surely. On the moratorium, it's going to start to end. This is going to increase first the delinquency, so early collection, basically. But just right now, we don't see that. So if you take the big banks, you don't have an increase, a dramatic increase of the delinquency. You have something, a small increase, but almost nothing. So to reach the NPL level, it's going to take 6 months, more or less. Okay, so basically, so let's say that when the delinquency is going to happen, and I think it's going to happen in Q2, because we start to see just in Spain and Portugal, we start more in Spain than Portugal, but we will start to see the end of some moratorium. So it's going to increase the level of delinquency for unsecured. So I see the unsecured business NPL potentially is interesting end of this year, beginning of next year. For the secured part, it's going to be much later, and much later because there is lots of much more inertia in the unpaid installment. So here you're going to have some effect, but in 2021, 2022, sorry, 2023 as minimum. So the secured part will be later. After you have so the unsecured will be the first to impact, apart from the SME, okay, but came very quickly. But here it's a little bit difficult to understand where we are. It's sure that there is some sector, but there is it's just going to close after the help, and after the level of unemployment will help to understand what is the level of delinquency that you're going to have now in each country. So what's the increase of that? What is going to be key for us as servicers is going to adapt the solution, because clearly more than ever it's going to be important to see what we can do to help the debtor to maintain or to pay something, and to adapt to the situation. Is really going to be a moment that, of course, we have the technology now on web, but it's really going to be a big increase in terms of delinquency. I think so. But it's taking time, mainly because that's the first time that every actors thinking about banks and governments above, really put lots of actions to minimize their delinquencies and to help people going through the COVID crisis.
Thank you.
Maybe a side effect, yeah, to what Jacques is saying is that we also shouldn't underestimate the effect of the courts having been closed in various markets for quite a bit of time. And that backlog that has built up there will also result in a lesser ability to handle all the bankruptcies. So it remains to be seen, indeed, in terms of timing, but also in terms of collecting in the legal process.
Unfortunately, we ran out of time, so I would like to thank you all. This was really interesting and very insightful, so I hope that participants share my view. I would like to thank you all and say goodbye.
Thanks a lot.
Thanks
Thank
a lot.
you.
Thank
Thanks
you.
a lot.
Bye.
Thank you very much.
Thank you.
Bye-bye.
Bye-bye.
Bye.
Bye.